We are what we call a relationship audit team. We have a very unique process, which is one reason why we looked at ACL for the GRC process. A relationship audit team, they spend most of their time developing a relationship. What does that mean? It means that you spend a lot of face-to-face time with either leadership or second level management. You do walkthroughs of processes, you sit in staff meetings, you personally you go in and do the job that the people you're auditing have to do. I would say it's imperative. My whole belief is that data will drive audit processes. They do to some extent today. People like to track things. I don't think they always track the right stuff. But understanding data, understanding the data drivers, understanding the data drivers that drive the process drivers of the risk and the risk drivers of the risk families, once you get all that together, the only way to look at it is through data. You have US regulations, international regulations, you have accounting regulations, so there's just regulations everywhere. And you have to be cognizant of what those are and how they apply to the processes that you develop. You have technology risk, you have operational risk, you have legal risk, you have reputation risk. Reputation risk is really exacerbated by all of the other things that you have to manage. If you give lousy credit, it impacts your reputation. If you don't have a smooth operation and your customers complain, it impacts your reputation. If you don't comply with rules and regulations, it impacts your reputation. So it's a very holistic and aggregate group of risks that impact the financial industries. It allows me to have my process, a relationship-based, risk-based process, without any grief whatsoever in sitting down and putting it in a system that allows me to have electronic work papers, to monitor performance, to know what's going on with my audit team, as well as know what's going on with my business. It was really the most flexible tool out there, and it was almost like it was made for our process. Last year was the first year that we gave the senior management team and the audit committee a risk-based report where we actually rated the risk of the organization. There's 7 different risk families that the enterprise risk management team uses for the bank. We adopted those. We actually rated those based on all of our work and the work of every other audit that was performed, whether it was outsourced or regulator. When you put all that data together, it's never been done before, but we put it together. All of it you can get right in ACL, either data analytics or in the GRC. You put it together, you come up with the 15-page report for the audit committee that says we're good or bad or whatever, with some really detailed comments as to what drove the ratings. They had never seen that before. That was an aha moment. It was a wow moment. As I mentioned before, to me, the 2 biggest returns on investment, and I don't look at return on investment monetarily. Okay, I just don't do that. 1, my team is cohesive, much more educated, much more value-driven, and value contributory to the organization. That's a win for us. The other one, the organization has received the benefit of that value. And because of that, it's been a value to me.